I have seen that you deploy more than one Iron Condor calendar trade at a time. Could you explain the rationale behind how you layer the second trade? If I scroll down here to the Iron Condor strategy, we do have an availability for 3 trades at once. Right now, we only have one, kind of the way it's worked out. But yes, we can do 3 trades. And essentially, the reason that we do this, of course, diversification. An Iron Condor throws out a pretty wide net. So there's nothing wrong with one Iron Condor. You could do that to where you put a small portion of your portfolio towards a delta neutral strategy like Iron Condors, and you just throw out one, manage it. We use stop losses. I'll get into that later. But to add diversification, you can add 2 or 3 different layers. And what you'd really want to do, you don't just want to throw 3 very close to each other, because then you're basically double and tripling up on the same trade, right? You'd want to vary things across price. So for example, the SPY, I can actually show you our current trade. So this is our trade, and right there at that hash line is the price. So right now we're basically break even with this trade. We opened it when it was right there in the center. So what you don't want to do is just open a bunch of trades where they're basically just double of the same thing. But since the price has moved significantly, the first variance is across price. I could open one if the price was here, another one if it gets over here, and now I have 2 trades that are centered around different prices, and that's going to make it more diversified. The other thing that you can do to make it even more diversified, you don't just open the same trade on the same expiration. Right now, we're doing this 56-day, but the next trade I open will probably be on the May cycle. So now I have diversified again across a different expiration cycle, different time frame. The other thing that you would want to look at, of course, the VIX index kind of sucks, but everybody knows what it is, so we use it a lot, at least to show people. I don't use it in my trading, but you could also vary it across different volatility levels. So maybe you opened one Iron Condor when volatility was pretty low, and then you opened another one when it was higher. Now you varied it across volatility. And then, of course, the fourth layer you could add is different asset classes. So maybe you've got 1 or 2 on the SPY, and then you could throw out one on the TLT for the 20-year treasury. You could do things like that. And now I've got Iron Condors that are spread out across price, time, different expirations, different volatility levels, and different asset classes.